Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the markets, the stock market, the crypto market, the metals market, and any other market where we can make some or a lot of money on the internet. Load up discussion today. We are talking Bitcoin being back up 7%, back over $70,000. Trump tweets for banks to reach compromise as soon as possible for the crypto bill, and Thrive Capital and Andreessen Horowitz to lead $4 billion Anduril round at around $60 billion valuation. We'll be talking about these valuations in the private market. It's really ballooning still, and where we are in the cycle as a consequence. So looking forward to that discussion. As usual, I've got Legendary in the co-host seat with me today. We're ready to get into it. Just a reminder, friends, before we do, nothing that we say here is financial advice. The market is very, very risky. We do not know anything for sure, so please do proceed with caution and exercise your own judgment. With that out of the way, Legendary, it's Wednesday. It's the 4th of March. How are you doing? How are you feeling?
Jim, I'm quite excited. Apple did announce the new MacBooks, or the new quite an extensive new product lineup. But the interesting part for me were the new MacBooks with the M5 Pro and M5 Max silicone, which is super performant. They changed the architecture for that to what they call the Fusion architecture. So they now, in this 3 nanometers manufacturing process, separated the CPU from the GPU. There is now this AI fusion bridge between them, connecting them. And what that all means is that they're extremely capable at getting very good throughput when it comes to hosting local models. I had this post out yesterday saying that if you now order a new MacBook for $6K, which gives you the M5 Max, which gives you 128 gigs of RAM, you get a MacBook that can host a model like Llama 70B, which is the one with 70 billion parameters, easily with good throughput on your MacBook. Now, the question is, why would you want to host that model? The answer is you don't. It's a model that's 2 years old, and there's way better models to host. But the point here is more that 1.5 years ago, if you wanted to host that and have actually good execution speed on that, you would have needed way more expensive NVIDIA hardware to do that, and that would have cost you $40K. Now, obviously, you could have hosted it on all the MacBooks with that amount of RAM, but the efficiency and speed gain from what we can see so far seems to be really, really good for this generation. So I'm excited because I have something to upgrade from, which is my M3 Max MacBook to an M5 Max, just to see how this architecture actually works. They can have more performance. And also connected to that, the thing you missed yesterday on the show, B, I was speaking about the Quen models by Alibaba. They released that small model family, which is so small that you can easily run it on a mobile phone. It basically takes up less memory storage than having a couple tabs in your browser open. And these small models got really good. They used to struggle with a lot of things. Like, one of the most viral questions was, ask the previous version, which was also running on a phone, where does an Airbus A320 lay its eggs? And it would manufacture some sort of response. Oh yeah, it's the Airbus A320 is like one of the smaller jets in the Airbus family, and they typically lay their eggs in the engine bay, completely like hallucinating that it's an Airbus, but it's also sort of an animal. And basically showing that it can't have like a meaningful like reasoning process in that size to understand, oh, this thing is not an animal, despite the insinuation, the question that it were one. And the new Llama models, the Quen 3.5 0.8B, which is again the model which would run easily on your phone, does not struggle with that anymore. So they're extremely competent given how small they are and given how easily it is to run them locally, which is really cool as well.
Sounds pretty cool. Sounds pretty technical. I would say on the scale of technicality, I am not interested in that level of complexity. Though it is exciting that you are excited about it to that degree. I think the model stuff, I'm very interested. The reason why I'm super interested in the models and that conversation, I'll talk about the MacBook thing in a second. The reason why I think the model thing, the reason why it's so good that you're on top of the models is from the perspective of an AI bubble. And an idea that has been introduced to me recently, and maybe we'll talk about this towards the end of the show, so it's a bit of a preview. I know the final headline is about Anduril and the 60 bill valuation, and I know it's a weapons company, although it's, I guess, integrating AI a great deal as well. Is because the question in my mind, which has been introduced to me, is all of these AI companies in America are incredibly highly valued. But you mentioned the Chinese models, Andrew, which are potentially, well, they seem to be mostly open source and they're free at the moment. So the tension for me at the moment is, can the Western, like the idea that this technology is going to be super powerful and interesting and important, the answer to that question is definitely yes. I don't think anyone's debating the answer to that question. The thing that people will be debating is, can we justify the evaluations and the amount of spend going into them on the American side or the Western side if some direct competitors are going to be open source and either free or very, very low cost? Because that would mean that although this investment is going into great tech, it doesn't mean that it can necessarily generate the profits required to justify this level of spend. So I think that's a nuanced question. Maybe I hope we can get into that in a bit. I don't know if you have any initial thought on that.
My initial thought on that is that even though models are open source coming out of China, most people still realistically won't be able to host their own Kimi 2.5, their own DeepSeek V3.2 or V4 when it comes out, because you will still need someone who's running an AI data center to host that for you and deliver that model for you, and you will pay for that compute. So then the question is kind of becoming like, are you a software, are you a hardware company? And you probably will become both to a certain extent, and you will already start to see how interlocked like OpenAI, NVIDIA, software hardware companies are. It's kind of like, if you think about an iPhone is both, right? They are building the iPhone, but they're also building iOS. So it kind of makes sense. You build the hardware and then you build the models for that. And then you make the most out of the iOS as software because you built the hardware for it. And now these layers are separated. You have OpenAI running on NVIDIA. You have people building models which are optimized for NVIDIA. And then you have Hugging Face, which is this website where you can download all sorts of models. There's an active MLX community, which takes NVIDIA optimized models and re-architectures them to optimize them for Apple silicon so that they work well on our MacBooks. So at some point, I think these two will converge, and you will have a company who's building the hardware, also building the LLMs. You will have Apple probably at some point coming out with their own agentic layer as well, because I think it makes sense that these layers are not separated at some point anymore.
Maybe. I think one of the things we just talked about with Apple is that they seem very, very reluctant to need to enter into the build-out race, and they seem to be very happy to partner with people. They're one of the main people that are opting out of this unending capex spending competition. And who knows? Despite not loving Apple as much as I used to as a hardware product purely, I think it might be super wise for them to opt out. It could prove to be very, very wise to not participate in this gargantuan spending battle when there's really, and I guess that's just my overriding concern. Like, okay, I understand that it's a worthwhile endeavor and the tech is going to be super important, but how many of these companies are going to die in the process or hurt themselves in the process by spending that money? I was watching the All In interview with Dalio earlier today. I think it was only released one day ago, an update to their last conversation. And I think one of the interesting takeaways for me I've been investing for about 5 years now since I discovered crypto, and then I've broadened it out, is something like, you can't confuse the technology with the company. Even getting married to OpenAI or getting married to Anthropic because you think the AI narrative is good. Sometimes we even talk, Ledge, about getting AI exposure, like got to get AI exposure. It's like, yeah, I think you do want to try to. There's a reasonable chance that all the ways that you choose to get exposure go to zero. And whilst the tech still becomes one of the most important things of the next few decades, so that's something I've just got going on in my mind at the moment. Any final reflections before we get into it? I'm sure we're going to circle back to this in the final headline.
No final reflections for now, but I see Phunky with his hand up, so I want to quickly pass it to him before we get into the price action.
Let's do it. Phunky, welcome to the stage, man. What do you want to say on AI here?
I think I'm 100% with you, B. I think Apple should stay out of it. As an Apple shareholder, I think one of the things that they clearly have done well. I mean, look at how many people are just rushing out to buy Mac Studios, Mac Minis to run the stuff. And on the conversation yesterday, Rahim had mentioned this. Like when they opened up the Apple Store and allowed third-party developers to then create the apps, just provide the platform and let these other AI companies sort of battle it out. Because didn't we say earlier that isn't Siri using Gemini in the back end? Like, I think they realize that their AI is not. And I think that's the way forward for them. And it's probably the smarter play. Just get out, as you like to say, B, get out of the way. Just get out of the way of these other big AI companies that are doing their thing.
I think this might be one of the best. One of the ideas that I've had, I want to make a list of all of the top signals from the past cycle, because I feel like I wouldn't necessarily say this is like full transparency. I don't know how good we are at calling bottoms necessarily, but I think we're really good at calling tops. I think one of the enduring messages is this get out of the way thing. When you see people doing like kind of really aggressive things in the market, prices getting a bit aggressive, big players going really aggressive for each other, I feel like that's one of the learnings from the last cycle. Just get out of their way, let them fight it out, be there to pick up the pieces once you see where the chips have fallen. I like that message. But look, we got a lot of other messages to convey today. And to be honest, we talk a lot about AI now. We've obviously moved in that direction a little bit to cover what's most important going on in the world. But today is crypto's day. Let's spend a bit of time on crypto. Bitcoin is up 7%, back over 70K. So we want to talk about that. We want to talk about the latest price action to get you up to speed with what you need to know. Bitcoin's up 5%, back over 70K, hit 71 briefly before pulling slightly back. It's up 8% on the week now. ETH is up 4% as well, back over 2K, up 7% on the week. BNB's up a few percent to 650. Solana's up 6% to $89, and you have Hyperliquid still strong, up 1% to 32. That's up 20% on the week. It wasn't long ago where I was saying, I think hype over Bitcoin potentially now for me. Although my portfolio doesn't necessarily express it, I just think hype is an awesome coin. We have Pepe up a few percent, Pump's up 5%, back to a 2 bill FTV. Pengu's up a couple of percent, SPX is up 9%. Fartcoin's up 4%. Tibber is up 10%. That's what we've got going on the more meme coin side. On the headlines that we're going to talk about today, we'll talk Bitcoin and other major markets. Ledge will give us a bit of a breakdown on what is going on there. We'll talk Trump's important tweet on banks and stablecoins and what banks should be doing to reach compromise as soon as possible for the crypto bill. First time I've heard him re-emphasize, or a slight re-emphasis on this message, actually. I think before it seemed a little bit more anti the crypto companies. This one seemed more like, all right, banks, time for you guys to get in line now. Crypto is important to us. You guys need to make it work. So I'll break that down as well today. And then finally, we want to talk valuations and defense tech. Thrive Capital and Andreessen Horowitz will lead a $4 billion Anduril round at around a 60 bill valuation. That's 2x its previous valuation. So we want to talk about that on today's show as well. Some notable price action got power down 90% to 180 mil FDV. Just a casual 90% down in a day. Love to see that. Edge is up 148%, just a casual up 148% to 250 mil FDV. Some games going on in the market today. And in other news around crypto, got CZ backed YZ Labs investing $100 million into Hash Global BNB Fund. You have more tokenized stocks coming on chain. Ondo Finance, tokenized stock platform on Binance, wins regulatory approval in Abu Dhabi. MetaDAO announces Futadio, where founders can raise direct from community on day one. This was a note from maybe yesterday or the day before. Venice AI model removed from OpenClaw's list of model providers. And then finally, CryptoPunks can now be bought with stablecoins on their main website. Thought it's a nice little addition on the NFT side. But that is the news. Beyond the main headlines, of which there are some super important ones, I didn't think there was as much going on aside from that today. But that's why we're going to focus on the main stuff today, which I think is super important. But before we get there, Ledge, today, is there anything that's catching your attention from around the market that you'd like to talk about?
Yeah, two quick things. I was amused to see CryptoPunks using the conversion of 180,000 USD to 42 ETH, which means they're pricing ETH at 4.2K, and we are 100% price increase away from that, a bit more than that even. So that I found hilarious. On the more serious side of things, Venice AI. So basically, in the open cloud docs, you did find them as a model provider in there. They did get removed. It's not an unknown that Peter, aka the founder of OpenClaw, is not a fan of crypto. Quite the opposite. Hates our industry with passion and has reinforced his view after some of the meme coin shenanigans that happened after he was forced to go through multiple name changes with his product. But the thing I want to touch more on is I looked more at Venice's pricing and the Diem token, and Diem token is down a bit today. I think it is down to, let me see, $550-ish, $580, down 15% on the day. Over the week went as high as $900 in one spike. And I bought some more Diem on this dip because I'm actually thinking that it's a worthwhile endeavor for me to try to go away from my Max subscriptions. Like, I have Max subscriptions for everything: Max Claude, Max Gemini, Max OpenAI, Max Kimi. So just my subscription spend is like 800-ish bucks a month. Plus then I have OpenAI, Open Router API keys, Fireworks API keys, other stuff that I'm pulling, or where I need, I don't know, I need to use Nano Banana. I need to use that via an API key if I build that within another service that I'm building and tooling. So I'm at a point where for me it's actually worth to spend like a bunch of money to buy 20, 30, 40, whatever Diem tokens and try to get away from the subscription as much as possible. And
so how would it actually work, Ledge? Like, say your spend across these variety of models on the Max one is around $600 to $800, just to say that number.
Yeah.
How do you know how much of the Diem token you need to try to cover that? And how does it work? So you buy these Diem tokens and you're still using 4 or 5 models from within the VVV interface. How do you know?
Yeah, that's a fair question. So you buy the Diem tokens and you stake them. And you buy 10 Diem tokens, say for $5,000, $6,000, whatever it is right now. And you stake them, and that gives you 1,000 credits across Venice AI for API usage. And then you can look at the different models, and it tells you how many credits. It also depends on the reasoning level you're using for 1 million tokens or for an image generation. Take a simple example. Nano Banana 2, Gemini's most recent and most powerful image generation model, is 10 credits per image to generate one image in Venice AI. So say if you buy one Diem token gives you $1 of compute. You could generate 10 images a day, and that could use up your entire Diem credit that you have this day. Or you can use the same credits to use the video models, whether that's like Kling or Sora or Vio, which is Gemini's video model, to generate there, or use the text model. So basically, the math that you need to do is you need to look in your Codex subscription, whatever subscriptions you're using, and see how many tokens am I using, look at the pricing, and figure out how many tokens you need to buy. Now, honestly, I can't get rid of all subscriptions because the amount of usage I get out of a $200 Codex plan is insane. I had days where I used more than 600 million tokens, which I think was roughly the equivalent of 20,000 average Venice users on what they would daily use. So that's insane. Okay. It's not feasible, but at least I can get rid of all but one subscriptions and try to cover the rest via a somewhat healthy stack of Diem tokens, and at least save money on that end, assuming Diem token price doesn't completely crash in 12 months, obviously.
Yes, that is the thing, right? And is there not an idea out there that, so yeah, the one drawback here is the idea that the cost of compute will go down. And if that does happen, then Diem token also goes down. But then the competing idea, which I've heard, Ledge, and maybe just get your view on this as we close this conversation out, is that at the moment, the cost of compute is being aggressively subsidized by VCs. Like all of these companies are raising humongous amounts of money, which means that they only need to charge, I don't know, $20 or, well, I mean, certain parts of these offerings are free, and then a part of it is paid, but maybe that's aggressively subsidized. So do you have a view on the cost of compute? Like, is it going to go down? Or is it heavily subsidized at the moment? What do you think?
It's massively subsidized. And you can just figure it out. Go on Anthropic's website, look at how many tokens you get roughly, or how much usage you get out of your $200 plan, and then try it. And that's all for non-commercial use. That's private use. If you need it as a corporate institution, you need to have like 20 seats for your team. Anyone gets a cloud. They don't get the $200 cloud subscriptions. You have to go, if you agree to the terms and services and you want, to align with them, you have to use the commercial, the B2B product. And that is way more expensive. That's like, I think, 5, 6, 7 times more expensive for the same amount of use.
Got it.
Companies who are not going to do that still going to use a plan. But I'm saying in theory, they're pricing companies way higher than individuals who are subsidized. And then I'm thinking, even if the cost of compute goes down significantly, that just means, yes, Diem might dump as a token, but that also means that my dollar per Diem token is just going to go a longer way than it goes today, which means I can run even more agentic tasks, because I think even if the cost of compute goes down, that doesn't mean that I'm going to use AI less or the same amount, and just it's going to be cheaper for me. Quite the opposite. I'm going to use it even more than if cost of compute is down. I can do even more things.
Okay. Very interesting. Very interesting stuff. I do think for sure that, I think you could probably run the maths and figure out if it's worth it for you or not. B, it'll be interesting to see you run this experiment and see to what extent the Diem token can replace to some degree your current AI subscriptions. But C, I think it's cool that crypto is useful. Like there is potentially an interesting use case here that is actually tangible beyond, maybe this token's going to go up. Maybe there's a narrative around it. No, there's like an actual use case here. Now, is it the right value? I don't know. Is it appropriately priced already, or is it in a bubble? I don't know. But, it seems to be a legitimately interesting use case here. So I think that that's interesting. One update from my side that, kind of linked to this, maybe talking a little bit more on the trades at the moment before we get into the main headlines, is I was chatting to Hershey in the Telegram chat, having a conversation around some of these tokens and entry points and sizing and exits. And one of the things I think I reflected on, we talked about the VVV trade on Friday, was it Monday? I can't remember. I wasn't on the show yesterday. Maybe it was Monday or Friday. And I think, you've got to be got to get a good sense of where you are in each narrative. So I think the news came out that VVV, for example, got delisted from OpenClaw's website. I think it's still integrated in some way, but it's not the preferred provider for some reason. And so I think that was maybe a little bit of a hit, although it's still holding up quite well. It went as high as $8. If you just pull up the VVV chart here, Ledge, instead of the Diem one, you've got VVV running up to as high as 8 something. I think mine and Hershey's entry point was, I think maybe his was 5 something, mine was 450. And I think sometimes you just got to take things off the table and then reassess. I think the main reason why I'm in the take things off the table, even if you have a narrative emerging, which you think, okay, well, this is encouraging. It's certainly encouraging that there is something a bit more substantive to this AI crypto thing compared with AI agents. If you remember at the start of last year, we were trading AI agents, which were basically meme coins disguised as AI agents, which was not useful. This is certainly more interesting. But I think two reasons why I'm in the, you might have to be in and out of these things. If you get a quick win, like this went up 30-40% for me in a few days, or like 2 days. Like, okay, well, you're going to have to book that, I think, in this kind of market. Number one is the conflict. What is going on in the world at the moment? And maybe I am disproportionately affected by this as I'm in the region. But it definitely makes you question how smooth the next few weeks and months are going to be. And so I think if you get given 30-40% in a few days in anything, whether it's on the AI narrative or anything else, I think you probably want to take it. I talked about, Ledger, I was telling you about Chevron with you earlier. I've been in Chevron for a while, and maybe I'm up 20% in that in a couple of months as well, maybe something in that region. And I'm wondering whether that's time to just take it as well. I know, with the Strait of Hormuz closed, or allegedly completely closed now, oil could potentially go much higher, but there's so much volatility in the world now. I think you want to take some of these things off if you get given the big gain that you might have been looking for very, very quickly. Second thing to note, maybe there's three things actually instead of just two. Second thing to note is, did you see the South Korean index today?
If you have a good day,
bring the South Korean index up. You made an excellent point last week where we talked about South Korean stocks coming onto Hyperliquid, and maybe to light. It came onto lighter first, and then it came onto Hyperliquid. And you made the excellent point that the only reason these are here is because it's late. Like, they've already proven to be super popular. That is why they are being brought to people, which means you're late. And so I don't know exactly when you made that call, but if you just zoom out a little bit further to the maybe 6 months, Ledge, you'll see the humongous run up from 6 months. So if you were in this from September, then that's great. But if you're getting in February when it's getting put into Hyperliquid, you probably have 2 weeks.
This is where they launched it around, right? It went as high as 6.4.
Yeah, maybe it was like 2 weeks ago maximum, which there was still a little bit of upside left. But if you think about it across the grand scale, across the 6 months, you're right. You're like 1 day before it's the turkey and Thanksgiving. It's like you were living happily, living your life happily. 2 days before Thanksgiving, you're about to have your head chopped off. And that's what the South Korean trade was as it gets brought onto things like Hyperliquid or lighter, because it's already been so successful. And so I think seeing markets behave like this, it's kind of like in crypto, which I think we're super well trained for. It's like when people go into Bitcoin, then they rotate into ETH, then they rotate into Sol, then they rotate into alts, then they rotate into memes, then they rotate into something else. And it's like we're working through the indices now around the world as people are looking for different places to go. You had the rotation into semiconductors, you had the rotation into the South Korean index, and you obviously had the metals run just before this as well. You've had this rotation into energy as well. Copper, uranium moved a little bit earlier in the year. So I don't know, it feels like people are running out of where to go with their money. And so, if you get given something big quickly, I feel like it's the kind of environment where you want to bank it. And finally, my final take here, Ledge, is maybe I'll give you a chance to come back on that for your thoughts, and then maybe I've got one more if I can remember.
Cool. Then I'll give you even a bit more extra time, because I agree. If you have a long-term positions, your MSCI World, your gold, your Bitcoin, whatever you define as long-term position, definitely keep it. But if you get an outsized massive win, and 50% in a week is very significant, especially in this market. We don't know how the world's going to look like in 2 days. Definitely book that. Another thing I quickly wanted to point out is from the YouTube comments, Diablo had the question to me, $800 a month, are you profitable on your AI endeavors? The way I look at it is the amount of time that it saves me. And right now across the modern market plus my own content research, it saves me roughly 20 hours a week. And if I look at that over the month, that's like 80 hours of time saved. So it's basically, if I value my time above $10 an hour, which I most certainly do, it is profitable. And that does not even include all the health things, other things. that I'm doing with it, plus all the learnings that I get on top of that as well. So definitely profitable. And also, quite honestly, the pivot on the content base to me writing about AI stuff, which seems to do quite well on the algo, obviously matters for the creator payouts as well. So all of that is very profitable, but mostly so from the time perspective, which is the one that I like to look at most.
Fair response. Yeah. Okay. Good interesting to hear that's how you think about it. I'm sure I'll remember what my final point was on the investing side, but we're going to be talking some investing points specifically in the first headline around Bitcoin and the third headline around Anduril. So let's get into the first headline today. We'll talk Bitcoin's move. Maybe you'll talk us through some other major assets here. Ledge, what do we need to know?
Absolutely. As you said, it is a green day for crypto. BTC is as high as 70K again. The reasons for that we're going to get into the second headline. I'm not gonna foreshadow that. Instead, I'm gonna take a look at other asset classes to see how global markets are looking today. Yesterday, we did report that gold had quite a significant move down from the heights it did hit at 5.3K. Today, it's up again. We're almost back at 5.2K. Gold is up a bit more than 1%. Silver is also recovering a bit. Silver went down 7-ish% yesterday. Today, it's up 3% back at $85.50 on the stock side of things. We have a bit of a mixed board here. We have Nvidia being down 1%. We also have to keep in mind that Nvidia was up more than 3% yesterday, and a lot of the semiconductors were in the green, but have turned again. You now have Micron being down 8%, AMD being down 4%, Intel being down a bit more than 5% on the day. So a bit of a red day here, but it also is to do with the stock market generally having a red day yesterday. If we look at the pre-markets for today, they are quite volatile. Just before we started the show, all of the pre-markets were green. Just refreshed them on my other tab. They are now flat on the day, or actually in the case of the Dow, down 13 bips. So market's quite unsure what it's going to do today. One final point on crypto is to again take a look at the ETF side of things. Yesterday, I did report that we have seen a great start to the week in terms of Bitcoin inflows to the tune of 458 mil. And looking at the inflows yesterday, they were green again, $225 million. So we do see 2 consecutive days of significant green inflows into the Bitcoin ETFs, despite the situation in the Middle East.
Like it. Good bit of rundown there. Just tell me again, Ledge, where's the S&P? Did you just do the S&P or did I miss that?
I did. It is basically flat on the futures, and it is down 1% from yesterday.
The S&P just will not collapse, will it? It will not collapse. Okay. We said today's about crypto. Crypto's back up. Well, Bitcoin's up 7% at least. Okay, the thing that I want to address, we've been fairly bearish for a long time. We've started to say very recently, although I'm no lover of the new Bitcoin thesis, which is, I don't really know what the thesis is, just someone will buy it. Institutions will buy it now. That's not the original message, but that seems to be the new narrative. Can it be digital gold? I don't think so anymore, although maybe that narrative will come back when the price goes higher. Don't love the narrative anymore around it as much. Do think it can go higher. But even with that being said, how should we be thinking about crypto now? Like, I'm just coming. What is your position on crypto and the role it's playing in your portfolio right now? Kind of personal question, so people can get a sense of how you're thinking about it. Maybe I've been more clear about this recently, but I can also talk to it in a moment. What role is it playing in your portfolio, and what size are you thinking about it?
Yeah. Well, first of all, the majority of crypto that I'm holding right now is in stables. I still have a very strong amount of stables that I'm holding explicitly.
Okay, but let's say stables are not.
Let me continue this. that are sitting on chain and not off chain, for the exact reason that I do think that there is a time when I want to go more risk on and want to start buying stuff again. And one of the things that I started to do more is slowly acquiring more Bitcoin via a one-sided LP again. I was, and I said it on the show yesterday, I was actually surprised to see how well Bitcoin was doing over the last couple of days. I did not expect it. I told to Rahim that this is the Bitcoin that I did know, thinking back about shows that we had a year ago when we looked at the Goldman analysis that said whenever there's like an invasion shock, something like COVID happening, Bitcoin's the first asset to dip, Bitcoin's the first asset to recover and the fastest one to recover. And that seemed to have broken a bit once we collapsed from that all-time high. But now the last couple of days were super, super strong. Obviously, a lot of that is to do with the institutional inflows, which we were just showing on screen expressed via the ETF buys. But I'm starting to maybe gain a bit more confidence in the like short to mid-term potential of BTC again. So last week, I did start to shift some of my stables back into a one-sided LP that started to buy a bit of BTC back. So that is the reason like why I'm still holding the stables on chain, because I still think that there is stuff to buy, and I thought it was a good time. I did not expect that Iran war to start so quickly and aggressively, and I also did not expect BTC to perform that well in these circumstances. So definitely got a bit lucky here. But that is how I'm right now thinking. And if you just look at the crypto side of things, it's probably like 80% stables, 20% crypto. It used to be I don't know, 84, 85-ish in stables, and I'm like slowly starting to shift that again. Also, when I bought VVV, the Diem tokens for my compute, I did buy that from the stable stack, not from already existing risk exposure. So stable, still happy, and I still think the right thing is to be like highly stabled up, but I'm happy to also shift a couple percent of these stables back into a bit more risk on assets for like shorter to medium term trades.
Okay. I like the thinking, especially I'm not a big fan of just trying to buy, catch the knife, buy the dip once. So I definitely like the thinking of just slowly getting back into the thing that you think is good. I'll tell you something that I'm doing, which maybe I'm going to adjust actually. I have a few LPs running as well. And I've just been printing gold. Like I really like the idea of taking all the gains and just buying more gold. However, one of the ideas I've been trying to express with you guys recently is just like relative risk reward, right? Like obviously buying Bitcoin at 67 is better than buying it at 127. And I spoke, once when I made good amounts on some of the angel investments, for example, I remember some of the proportion of gains going into Bitcoin then when Bitcoin was around 40 or 50 or 60, I can't remember, was higher. And then as Bitcoin went higher in price, the amount of those gains which were being invested over time would decrease as Bitcoin went higher. And so I think something I need to adjust here, despite how much I still like gold as a medium to even long-term hold, gold is high right now. It's all-time high. Do I think it's a good hold? Yes. Am I happy to hold through some of the volatility? Like as you said, it was like down maybe 10, almost as high as 7-8% yesterday, probably on the day. Am I happy to hold through the volatility? Yes. However, it's still high. So I wonder whether now with some of the gains that I make, do we go into Bitcoin with those gains at 60, 70 range and just start, slowly DCAing back into that because the risk reward is just better. And that's one thing I've been thinking about, Ledge. Do you have a view there? What do you think about that strategy?
I like it. To be honest, I like it. I like it a lot. And on the gold side of things, the one, because that's the one thing I was wanting to double down on a bit. That's the one thing I'm still trying to question how I want to trade my gold in terms of do I want to split a short and long-term portfolio a long-term bag of gold, or am I just happy to hold my gold for a way longer period of time? Or is gold an asset where I'm also like happy to take profits along the way? Because ultimately I am up more than 100% on my gold buys in not too long of a time amount, like I don't know, 18, 22 months, something like that. So that would be nice to book, but it's also like an asset that I'm like super happy to hold. But I'm not willing to treat it the same way I'm treating my MSCI all country world stocks, which I'm happy to hold for a couple decades to come, even maybe 1, maybe 2 decades. With gold, I'm a bit uncertain on how to actually trade out of it and at what point I would be willing to do that.
Okay, I've got an idea on this just to show you. This is from the Dalio interview earlier yesterday or today, which I watched. And we'll get to the next 2 headlines because I think they're important as well. But the final take on this specific part, and I guess it kind of relates to other things as well when you're thinking about proportions. He spoke about gold being a money, like it's a version of money, it's a version of wealth, and everyone should always have a certain proportion in gold. Everyone, all the time. Probably if you have no view about the world, it's something between 5 and 15%. And to be honest, it's been hard to get to that number because, you know, I think we've all not been accustomed to holding gold, right? It's not really our generation's asset. So it's been hard to even get to that number. And that's the number you'd probably get to if you had no view of the world, just as a diversifier. So I think there's that point. But also the view is, how much gold do you have versus when you're thinking about trading it and you're looking at other people, whether it's central banks or other people, how much gold do people have versus wealth, i.e. stocks, equity? Because the thing that's happened over the last few years is people's wealth is predominantly probably, and this is, you know, people who are very wealthy, it's all in equity. Like when you look at founders and when you look at all of these various people, but at some point they need to sell into money. And so one of the things he looks at is the proportion of money to wealth. And if the gap between those two things are very high, it means that gold still has a way to run, in his opinion, because too much of people's wealth is in equity, and not enough is in real money, either being cash or gold. And so I would guess, although I don't know for sure, that still people are overweight equity and not holding enough money, which is either cash or gold. And I think over the next period of time, people will still want to realize more of their gains. And I think a certain proportion will continue to stick in gold. That would be my thinking on that, Ledge. But unless you've got anything else to share, I think we can move it on.
I'd be interested to see what the ratio is exactly that he's looking at. So when people in Dali's opinion are not overweight equities anymore, but it's an interesting concept for sure.
Yeah, I mean, for example, Peter Thiel, I think, filed just the other day to sell, I can't remember how much, it was either 2.5, was it 25 mil or 250 mil of Palantir stock or something? And it represents such a small amount of his equity. And you can see, like, look, if you're one of these people that is very, very equity heavy because you've taken stakes in these humongous companies, probably want to run for the exit at the moment. Like Brian Armstrong, CEO of Coinbase, has been selling Coinbase stock endlessly over the last year, endlessly. And that's not as a criticism, right? It's just he's allowed to sell his stock. But it's been a very good time to keep selling and realize some of those gains, I think. So definitely something to think about, because I think the world in general is overweight equity. Okay, getting into the second headline today. This is the news that Trump's really started to push for this genius stablecoin law to get moving, kind of really calling out the banks actually to try to get a move on. He says the US needs to get market structure done ASAP. Americans should earn more money on their money, he said on Truth Social. This is about the crypto legislation which they're seeking to pass in the United States to give a roadmap for stablecoin issuers, he said, is being threatened and undermined by the banks, which is definitely a shift in tone from recent news or from recent conversations where it felt like maybe a bit of the frustration was more directed towards the crypto industry for being difficult, when of course the main issue at stake is that the banks don't want stablecoin issuers or anyone in crypto to be able to offer direct yield to stablecoin holders, because that means, because they're concerned of capital flight to crypto rails, which means they don't get to only give you, I don't know, 0.5% or 1% on your money in a bank so that they can lend it at a higher rate to business, because you would do much better earning the money on it by yourself on crypto rails. So that's what's an issue. And it just feels like it's one of the first times Trump has come out explicitly and said it's on the banks actually now to get a move on, get their stuff together and find the compromise that they need to. He says the US needs to get market structure done ASAP. Americans should earn more money on their money. The banks are hitting record profits, and we are not going to allow them to undermine our powerful crypto agenda that will end up going to China and other countries if we don't get the Clarity Act taken care of. So I think that's pretty strong wording from the president to the banks to say that they need to figure something out here and get this deal done. Ultimately, Trump is a deal maker at heart, so clearly wants to get the deal done in some meaningful way. Although my personal take is I'm not really sure what the banks are supposed to do here. Their business model is under direct threat from the new crypto industry, whether that's stablecoin issuers or actually just crypto rails in general, right? Because as soon as you are holding stablecoins, you can earn yield, a much better yield, just even in decentralized protocols than what you would get holding them in your bank. So it's it is an existential threat to some degree. So interesting to note that that's the message projected by Trump. And I think maybe this is against the backdrop, of course, where, look, if you tie this in with what else is going on in the world at the moment, the petrodollar is once again under threat from the conflict in the Middle East. And so whether it's via money printing, whether it's the conflict in the Middle East causing some risks to the US dollar, the proliferation of stablecoins around the world is clearly a wonderful way to take some of the stress off the declining demand for US treasuries across the board in other aspects, as central banks maybe de-risk, don't want as much exposure to the dollar, want to go more into gold. Getting the US dollar into everyone's hand via stablecoins is obviously a priority to offset some of the other moves taking place in the world at the moment. Obviously, you've had other big countries and groups of countries trying to shift some of their commerce out of the dollar as well. So all interesting things to consider there. That's my take on it. Ledge, coming to you first, and I see Phunky with his hand up as well. Definitely want to come to him on stablecoins before we hit the final headline. Ledge, what are your thoughts?
Yeah, I'll keep it short. I've got to admit, I am surprised that Trump is now finding the time to refocus on the crypto side of things again, given the conflicts that are going on, given that yesterday the US also opened military action in Ecuador on top of the things happening in the Middle East. So I'm surprised that there is time for that as well on Truth Social and his agenda. And the market apparently as well, because if the market were to expect that, BTC would not be up 7% on the day.
But look, this is one of the things that I would say about this market. I know everyone's happy Bitcoin's back up to 70 today, for example. Just pull up the Circle chart, Ledge, and click 1 month. Wait, before you do that, what percentage do you think Circle's up in the last month?
It's up. I would have said it's down. Is that a trick question?
No. What percentage do you think Circle is up in the last month?
18%.
18.
Yeah.
No, wrong. 80. Up 80% in the last month.
Oh, wow. What
yes.
The fuck? It's up 60% over the last 5 days. That's crazy.
Circle is up. Okay. So as you can see on the screen, Circle's up 4% on the day. It's up 30. This is my chart. Maybe your numbers slightly different, Ledge. 35% in the last 5 days. And according to my chart on Google, 80% in the last month. There are so many opportunities and trades at the moment. I just feel good that I stopped shorting it before the move. So that's my win as a trade here. I got out of my short without losing money, which is kind of a miracle because I would have got smoked. But 80% in the last month. That is something. Phunky, coming to you here. What's your thoughts on the Genius Act and Trump's message here and Circle's colossal move over the last month?
I think they knew this was coming. If you recall a couple weeks ago when I was at ETH Denver and I went to the Blockchain Association policy luncheon, I was talking to Jessica Martinez and she said, I don't think we're going to see any action on March 1st about the stablecoin stuff getting settled in the Senate. She said, but I wouldn't be surprised to see things start to emerge before the 15th. Here we are today, March 4th, and Trump tweets this. So I know that they're having very high level conversations with the White House, with the OCC, the Office of the Currency Comptroller. And I think, getting back to the banks, this is a capitalist system. Compete. You already, how many times over the last couple of years when stablecoins, like when we started talking about Genius Act, you guys have pointed out again and again, the number one thing is distribution. You already have all the money as the banks. Get on board. Get on this train. Get onto blockchain. Put all this stuff on chain because you already have the edge. You have all the money. So why not just embrace the system? Think about the institutional clients that could then gain the efficiencies, the capital efficiencies of being on chain and having stables. You don't necessarily have to deploy it into DeFi, right? Like if you can just natively sit there and hold and collect, like you would in your regular cash, and then you could deploy it on chain elsewhere if you need to. I just feel like the banks are being, just recalcitrant for no reason because they have the edge with all the capital. So I think it's a very good sign. I'm hoping that we see something actually get done before the end of the month. And I think that they realizes this was a major campaign promise. And if he doesn't do it before the midterms, or especially before the campaigns really start for the midterms, because that's going to happen in the spring, it's now or never. So I was very encouraged. Not that I ever get encouraged by many of his pronouncements, but this one I thought was really quite good and a shot across the bow directly at the banks where it needs to be, and get back to the table and get this across the line.
I think that excellent point you made there, Phunky, is get on board, compete. If you think this is great tech, then get on board, get involved. And to that point, let's pull up the tweet from Patrick Collison. He is one of the CEO of Stripe. Him and his brother run Stripe. To that exact point, he's saying his latest tweet, 6:45, March the 3rd, yesterday, said, fiat versus crypto is less interesting than fiat X crypto. That's exactly the point Phunky is making. It's not like, if you're in the mindset of we are the fiat system and we need to be against crypto, therefore we need to oppose it in all these ways, that is the losing mentality, I think. Whereas what Stripe have done, obviously, with the blockchain they're building out with Tempo, with all of these other stablecoin initiatives that they're running, they're thinking in terms of, okay, we are in the fiat ecosystem already. Let's introduce the crypto rails and get involved right now where we can start to profit with it. They said, we're expanding our work with Visa to enable card issuance in more than 100 countries. These cards will be backed by stablecoin balances, enabling efficient and integrated global coverage. So they are getting involved. That is the point and that is the opportunity for companies who are ready to take it, because we're not going back to the previous system. This is clearly on the agenda for this administration, so they need to figure out how to get it done. With you on that, Phunky. Appreciate your take. Getting into the final headline today, Ledge, we are going to the news, and we don't have a huge amount of time for this, but let's touch on this Anduril round at 60 bill FEV, double their previous round. Defense tech company founded by Palmer Luckey out in the States. What do we need to know here?
Yes, absolutely. Anduril is seeking to raise around $4 billion. That is after they raised just a bit more than a year ago, June last year, at a valuation of 30.5 bill. So double up in less than a year. and they are seeking to raise from Thrive Capital and Andreessen Horowitz. Obviously, what is helping Palmer Luckey and Anduril is the situation in the Middle East, as drones are reshaping modern warfare. We have seen the Altius drone being used in the Russia-Ukraine war over the last years. I think it's been said that this is an easy-to-launch drone from land, from air, from sea. It can stay airborne for several hours. It has long-range strike capabilities. It has destroyed Russian equipment worth hundreds and hundreds of millions. So with the amount and intensity of conflicts increasing all over the globe, and especially now with the situation in the Middle East, it probably does not come as a surprise that the valuation of this company, of Anduril, is going up significantly as part of this fundraising round. Another thing that I found interesting is also connecting to that you have Peter Thiel's Erebor, the crypto native bank, which also got a bank charter, I think just last month. And that's also a bank that is backed by Palmer Luckey as well. So connecting the defensive capabilities with now having a nationwide chartered bank, this investment vehicle in Erebor. Erebor is also an interesting narrative that is forming or shaping here. But first and foremost, double up of valuation in 8 months as a result of this increase in global conflicts and the change of how modern warfare is looking like, being very much relying on drone usage.
Indeed. We started talking about defense tech in around December. There was one drone company that I thought was particularly interesting. And so can we get the screen changed? In December, I think we started talking about defense tech, and it's been something which, I don't know. I do think we're a little bit late to it all. When I think through the way to invest, ideally, is trying to think a little bit more further ahead into the future. Although, as we say a lot, like, we're probably better in the 3 to 6 month region, and with that in mind, maybe defense is still very much on the table, along with energy and oil. Personally, Ledge, I don't know maybe we close the show out thinking about the conflict and how we are perceiving it. Obviously not being experts in any way, but if there's any takeaways or thought processes we're applying to our portfolios as we see how the conflict unfolds, and obviously it's changing very quickly and we're no experts, but maybe let's close out like that.
I'll stick with my AI thesis that you pushed back a bit on last time, I think on Monday when we chatted about that. Because to me, even the thinking here, and Anduril is raising money, they're building more drones. Drones ideally become more and more intelligent. Be more intelligent, they need to have good AI tech available to them. And if anything, then my portfolio risk on process would be now to find interesting AI plays that might link into this as well. I think that for me is something where maybe it is an intersection of crypto and AI, but that's something where I probably, especially if I look at the crypto side of things that intersects with AI, have the most experience and expertise with versus all the other things that interest me. So I'd be willing to want to find some interesting plays here.
Okay, my current thesis is, if you want regime change, I don't know that you can get that in the format that they're currently trying. I've tried to run it through my head in how it's possible. And again, we're certainly no experts in regime change, but I don't see a way for it to be instigated in a meaningful way from outside in a country so large and diverse and strategically positioned. I don't know how you can get that without a longer protracted conflict. And so, to be honest, I really don't know how this plays out. I know some people really want to say that, oh, it'll be over soon, or they're running out of munitions, and it's just going to be done and dusted. I'm fully prepared for something more protracted. Although, I don't know. Go on.
Did you see this clip on Fox News where Donald Trump was asked like who's supposed to become Iran's next leader and what he had to say on that, talking about regime change?
Yeah.
Yeah, it's a 20-second clip. Let's quickly play it if it works like that.
Do you have someone in mind right now? Because you said all the people you did have in mind have been taken out. What do you think?
Well, most of the people we had in mind are dead. So, you know, we had some in mind from that group that is dead. And now we have another group. They may be dead also, based on reports. So I guess you have a third wave coming in. Pretty soon we're not going to know anybody.
So, yeah, adding to strategies on how to regime change. Not an expert on that topic, but I tend to agree with you that in a country that big, it's hard to force a regime change from the outside.
Yes, indeed. I don't know. I think it's going to be very, very difficult, and I'm not certain it's possible to do quickly. There's a lot of unknowns. I've consumed an inordinate amount of content recently around the region, understanding the politics, the geopolitics, not just between Iran and Israel and the US, but around the GCC countries, how they interact with each other. One thing I can guarantee you is if you think the Middle East is complicated and you haven't read into the region, it is multiple times more complicated than you think once you start reading in, because there's a lot of stuff going on that I think for whatever reason we are not exposed to in general. So there's just a whole host of things to try to get on top of. Very, very complicated situation. And so therefore, trying to do my own risk management personally, it's like, well, there are things that I know that I can try to manage, and there are things that I don't know which I can't manage. And maybe assuming a slightly higher degree of things there are things which I don't know, and thinking that, right, there could be things that come up here that I don't know. But knowing that there are going to be things that I don't know maybe means that I have to go a little bit more risk off here, especially tied with the unendingly high valuations on the AI side. Will there be great winners on the AI side? Of course, there will be. But I think there's no harm being a little bit more risk off in general. So the slightly more speculative things I was speculating on, I took off. I closed some of my shorts, for example, either slight loss or flat. And I closed some of my other positions, which we spoke about, for a profit. And then we take it from here. I'm still trying to decide if I close my oil position. I'm up, so maybe I just take it. Maybe I take it off the board. And then we wait and see, because frankly, I know there are some people monitoring the ships coming in and out of the Strait of Hormuz, but I'm not an oil guy, really. I mean, I had a sense that this was the way the world was going, but I feel like you could equally just book it here and be happy and try to assess again. So those are my reflections on the day. Hope it's helpful for you guys. It's obviously a complicated situation. We don't know anything for sure. We're doing our best to get you some core information and provide our thoughts on it, not only about the conflict in the region, but also on these other interesting things that are going on when it comes to VC capital, defense tech, US regulation, and of course, core crypto movements, which is our bread and butter. So we hope you enjoyed the show today. As always, just a reminder, we do this every single day, Monday to Friday, 7 a.m. Eastern time, live on X Video, YouTube, and you can catch us on Apple and Spotify as well. We'll be back same time, same place tomorrow and Friday to close the week out. I hope you have a wonderful day. Take care. We'll see you on the other side. Bye-bye.